Hello everyone and welcome to Elliott Wave Cafe. This is the Crypto Cowboy, and for today's YouTube episode I'm going to talk about the Wave 2 and how a Wave 2 can actually unfold. So I'm going to take a look at the Bitcoin US dollar here and try to go through some of the possibilities that we have as a part of a second wave development. And for this exercise, what we'll do is we'll just assume that this move here from the lows in Bitcoin at about 39.48 all up here to the highs, we have already a completed pattern. And this is a completed Elliott wave sequence in a possible 1, 2, 3, 4, and 5. So we're going to call this a wave 1. And what we're doing right now is we're trying to see, just so we're not surprised by the market, in how many ways this wave 2 here can unfold and what kind of shape it can take. So if we pay attention here and we take a look from the highs here to the lows, we notice that we have a clean three-wave decline. So, you have this wave up here, which we consider as a wave as a wave A. Then you have a wave B in here, and then you can have a wave C. Now, since this is all we can count in here, just a three-wave correction, it's hard for us to count this whole move as impulsive. We would need another move low in here to be a fifth wave to have this move in 5 waves. So we're faced with this kind of issue right here, like how do you count the decline from the highs as part of a wave 1 and then, kind of coming down here for a wave 2. So if we wanted to be very, very simplistic on this retracement, what we're going to do is we're going to take our ABC correction and we're going to go and just say, okay, this is all we're getting from the highs, and it's going to be just a simple A up in B here and then down in C. And then what happens from here, remains to be seen. But basically, if this is a wave 1 and this is all we're getting in a wave 2, we're calling this a zigzag, just a simple move. Now, where do we go from here? So this is one way where a wave 2 can unfold, is just through a very simple zigzag. And now you can ask yourself, well, what's happening next? Are we going to make new highs? Are we going to take these highs up here and just start to, build an impulsive lag? Yeah, it's totally possible, but, it's not guaranteed. So what we got to do is we just have to anticipate what other possibilities come up as part of a second wave. So let's say that this move up here from the lows to the highs is a pretty long wave 1, right? It's a pretty massive move from $4,000 here to almost $12,000, right? Almost 3 times. And then you're looking at this small correction in here, and you're asking yourself, based on experience and just off the right look, is this wave this ABC move from the highs to these lows, is this enough to correct this whole entire pattern? And you might say, yeah, it's totally valid and it's possible. We're not breaking any rules. Everything seems fine. But there is a guideline, and that's called in the Elliott wave principle, that's called the guideline of the right look. And if you're going to count this as a 1 and a 2, this kind of wave 2 has to be to have more of a good solid proportion with the wave 1. And at this point, it really doesn't. Now, it doesn't mean that it's impossible and it's not correct, because you can break to the upside and continue to be in a very strong uptrend here into the price of Bitcoin. So leaving that to the side, let's see what's the next probability that we can have in here as part of a continuation in a second wave, and how can this develop. So if you're going to have a simple zigzag in here, you're going to have an ABC. What's the next pattern after a simple zigzag that kind of connects with this with this one? And that would be a double zigzag. So we go back here and we look for a WXY, we look for a combination, and then, as we know, when you have a 3-wave decline in here and you're thinking you're going to go complex, you're going to label that as a wave W. So now that becomes a wave W, you're going to get an X wave in here, and then you're going to get a wave Y. This wave Y in here, again, we will unfold in 3 waves. So we're going to decompose that and go to a correction. And we can place the labeling on there just so you can place the lines. So it will look something like that. You would have a W, you have an X, and then you would have a Y. Now you can see how this whole move in here starts to be a little bit more proportionate. This second wave, starts to look a little bit better comparing with this whole move in here. Now, how are you going to get kind of prepared that this is going to happen? Well, you're going to have to see what happens in this X wave. Okay, this X wave in here has to take a shape of a 3-wave corrective pattern in here, and it has to unfold as part of another ABC, right? Again, I'm not going to get a whole lot into the details of the X wave and the B waves. My interest in here in how this wave 2 is going to look. But this X wave can take shape of a triangle. It can be a zigzag. It can be a flat, right? It can be a lot of different kind of corrective patterns that kind of connect those two zigzags. So that's the next kind of outlook that you're going to look to have into this second wave corrective pattern. Now, what happens if the market decides that this is not enough and we got to correct a little bit more? Well, what you're going to do is you're going to get another X wave in here. It's going to come pretty close to this B wave highs, and then you're going to get another decline. And then this whole pattern starts to move from a WXY. It's going to move to a WXYXZ. And I'm going to show you how that looks. So I'm going to delete this and go and get just a simple combination in here. So we're going to go in a wave W in here. And you're going to put your wave X in there, wave Y. Wave Z is going to come lower here. Wave X goes up higher. So that's going to be your, and let me just do a channel. So that's going to be your channel that you're going to have for a triple zigzag, right? Because then all of these waves here in a W, in an X, in a Y, in an X, in a Z, it's all going to happen as part of a three-wave decline. You're going to get an ABC, X, ABC, X, ABC. So this is what we call a triple zigzag. So that's when, you know, this whole move up here, this little ABC corrective pattern that happens in here, it's not enough to correct this whole advance as part of a wave 1. So you need to get more of a proportionate second wave decline that comes all the way, you know, maybe to wave 4 of a lesser degree, or you're going to check out some fibs, maybe a 50%, maybe a 618. That's not the scope of today's video, but that's pretty much what you're going to look for when you see that the market fails to make new highs, continues to follow a corrective kind of structure, and you're looking for a second wave. So that's another way for this wave to unfold. Now, the other interesting thing is, you know, that the markets are fractal, right? And Elliott wave kind of follows the structure. We know that this kind of dividing into different you know, labels and different wave structures, they happen on all the time frames, right? So if you're going to have, you know, a wave 1 on this you know, structure, this could be part of a larger fifth wave, or it could be part of a larger third wave or whatnot, right? So the reason I'm driving that point is because if you're looking at this decline from here to the lows, this can also be just part of a wave A decline of a larger zigzag, right? So it doesn't mean that this move is complete. You can get a 1, a 2, a 3, a 4, and a 5 for a wave A, right? That's a 5-wave move, and then you get it up here in a wave B, and then you're going to get another 1, 2, 3, 4, and 5, and that would be your wave C, right? So that's an ABC, and this becomes a zigzag on its own that can also be corrected later to an X wave, and then you get another ABC decline. The problem that you have in the situations is that you're going to start to lose the proportionality between a wave 1 and a wave 2 if that becomes too large. So if you're starting to count a 5-wave decline off the highs, that's pretty strong and starts to look pretty advanced, you know your chances to go into a complex correction are starting to get minimized, because there's not going to be enough room into the second wave to go as much into a complex move. You're going to end up with a zigzag most likely. So that's kind of how you analyze a second wave pullback. Now here is what else it can happen in a second wave. So we've kind of you know, looked at the zigzag, we look at the double zigzag, we look at the triple zigzag in terms of a correction, and then we'll also look in terms of a larger proportion at a larger zigzag. So now this second wave can also unfold as a next corrective pattern, which is a flat correction. So if something from the highs starts with a 3-wave move, you always run the risk of having a flat corrective pattern, because flats are 3, 3, 5, and you can get them in a second wave. So if this is a 3-wave correction off the highs, you're going to look up here for another 3-wave correction to close to the origin of the pattern in here, right? You're going to want to retrace at least 88.7, 90% of this whole decline lower. You're going to want to correct here as in a 3-wave pattern, and then you're going to look for a 5-wave decline lower here. Now, I'm not going to get into the details of how many flats there are out there and, you know, how they shape and how they form. I think I've done, you know, lessons of that too. But at the minimum, if you're going to look to get a if you're going to get just a simple straight up flat correction, just in its basic forms, then all these three lengths are going to tend towards equality. And you're going to have pretty much wave B being almost 100% of A, wave C being 100% of B or 100% of A, and all this, it's just going to follow those kind of rules. And that's another pattern that you can get for a second wave. So you can get a 3, 3, and then 5. And that would be your second wave pullback. Again, if this pattern that I've just showed you in here, right, through an A, B, C, it's not going to be enough to correct this whole advance in here, we can go back to being a complex. This whole thing here is going to become a W, and you're going to get a flat in the W position. You're going to get an X wave in here, and then you might get a zigzag in the wave Y, and you're going to get an ABC in here, and that's going to be your X, right? And now you're going to get this type of a corrective pattern. So you see how you're going from a simple zigzag, from a simple flat pattern that ends up into this line to a more complex move that ends up being a WXY. So you're just extending that. Again, another way that this can unfold, it can be a running flat. So you're going to get a 3-wave move up here. You're going to go up in 3 waves. You're going to go a little bit higher. And then you're going to sell off in 5 waves. You got to stay above this level for it to be a running flat. But if this 5-wave move declines lower, you're going to get, and you're going to have an expanded flat. So that's another way that the market can unfold for a second wave. Again, this could be the end of a second wave, or it could be wave W of a larger correction, and it becomes a W. You're going to get an X, and then you're going to get another decline here in ABC for a Y. And remember, this Y wave can be a lot of different things. It can be a flat, it can be a zigzag, gosh, it can even be a triangle, and then you're going to move back up higher. So I hope things are not confusing, but if you guys know the 3 main patterns that you're going to get in a correction, which is a zigzag, a flat, and you're going to get a triangle, then you know the combinations that you're going to be able to get in the second wave. And while speaking of triangles, I want to make sure that we're not running into the issue where you guys are thinking that we could have a wave 2 as a triangle, because that's not correct. So you're never going to be able to see me or any other, more experienced Elliottician counting this as a corrective pattern. So you're not going to have a wave 1 in here and an A, B, C, D, E for a second and then move to new highs. This is a completely and totally wrong way to count the markets, and it's a grave violation of the rules. You're never going to have a triangle in the second wave position, and I'm going to explain to you why that is. Well, the reason that you cannot have a triangle in a second wave position is because triangles precede the final wave of a sequence. So you can only have triangles in the wave 4 or in a wave B position or in a wave X position because following a triangle, you're going to get a final move of that sequence. So for example, this up here, if it's a triangle, right, that is the final wave of this whole sequence in here, and then that's why we're getting a correction, right? So triangles in a wave 2, they can happen, and that's where people get confused. Triangles can happen in a wave 2 as part of a zigzag or a part of a complex correction, because you can have an A, 1, 2, 3, 4, 5 for a wave A, and then you can get a triangle in a B wave position. You can go in an A, B, C, D, and E, and that's your triangle. That's going to be your B wave, and then you're going to get another 1, 2, 3, 4, and 5, and this is your B wave in here. Right? Look at my nice B, and then this is your C, okay? And then you move back to new high. So the only way you're going to have a wave B if it's a part of a larger pattern, of a zigzag, if it's a complex, if it's an X wave, that's the only way you're going to get it. Right? So these are some of the forms that you are expecting to have in a second wave pullback. And, wave 2s are tricky, especially after you have a very large wave 1. If your wave 1 is a little bit smaller, right? If you're coming from a low and or if you're in a smaller time frames and you don't have a lot of time to run to a super complex correction in here, more than likely you're going to get just a basic zigzag for a second wave. And it's going to be a little bit harder. There's not going to be enough space on the chart and time-wise to go complex or, to have such a large move for a second wave. Again, it depends on your time frame, because you can find complex corrections in a 15-minute time frame, because this whole, as markets are fractal, this whole move up here can appear also on a on a 15-minute chart. But you get my point. It's got to have the right look. So you're going to ask me now, hey, does this mean that we have a completed pattern in here and we're done and we're moving into new highs in Bitcoin? Well, it's one of the counts that we have into our pro room. But again, am I super confident in that? Maybe not really, because I don't think that that's a whole, that's whole of the corrective pattern. As I've mentioned before, this whole thing up here is kind of small. So I think I gotta be at least, respect the market and just kind of, let it develop a little bit more before I jump and say, yeah, it's the end of a correction. And the way I do that is I let it develop. And I wanted to see the market move back first and see how, we're taking this 11,135 first, and then see if that's impulsive or if it's in a three wave. Then I'm getting more reads from the market that maybe we're embarking in the new impulse. But if I'm seeing a three wave move up here, something like that, then I'm starting to worry and say, well, this could be a flat correction and we're going to break to new lows. And that's, these are little tricks. Then you can go into small time frames and then kind of see and read the market and come up with the best interpretation. But just so you're not surprised, always pay attention at the right look and, have the scenarios in your mind prepared, just kind of how I presented them, look through zigzag, through double zigzag, flats, complex correction in flats, and, triangles in wave B position. But all the time, just let the market develop and know exactly what you can expect for the second wave pullback. Again, thank you guys for watching. If you like the content, hit the thumbs up button, subscribe to the channel, come visit us into the pro room. We got a lot of information there and charts, and we'll look at this, again, all day long. And we also take trades, live trades based on the patterns that we're watching. So if you want to be part of it, the links are below. And again, thank you guys for watching, and I'll see you on the next one. Bye-bye.